Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Sofi Technologies stock, SOFI, Palantir Technologies stock, ticker symbol PLTR, and NIO stock, ticker symbol NIO. We're going to be talking about the latest analyst price predictions for all of these stocks, including what recent analysts have been upgrading Sofi stock to. Then we're going to talk about the latest price increases for Palantir Technologies stock. We're also going to see what Cathie Wood has been buying and how she's been buying up more Palantir Technologies, along with many other institutions that have also been buying up Palantir Technologies, and then we'll end by talking about NIO stock and why Wall Street analysts are extremely bullish on NIO, along with some other electric vehicle makers, so stay tuned for that. If you want more videos like this one, remember to smash the like button right now, subscribe if you are new, comment your thoughts down below about any of these stocks, and now let's get right into today's stories. So Sofi Technology stock, ticker symbol SOFI, is trading at around $13.86, and its price ranges between $13.75 and $14.42. However, for the last year or so, the high-end price of the stock is around $28.26, while the low end of the stock has fallen all the way down to $12.82, which would have been a fantastic buying opportunity. We can also see that its current market valuation hovers around $11.22 billion, so analysts are watching this stock very closely. Particularly, analysts are watching for their revenue growth, which is anticipated to come in around $281 million or more for the next consecutive 4 quarters. According to recent ratings by 9 analysts, from a scale of 1 to 5, with a 1 representing a strong buying opportunity and a 5 is a strong sell, 2 analysts are saying that Sofi Technologies is a 2.5 or a 3, which means it's a hold right now and it's trading rather neutrally, while 6 analysts, on the other hand, rate the stock anywhere between a 1 to a 2 as a strong buying opportunity, or just a flat-out good buying opportunity right now because the stock has pulled back. However, none of these 9 analysts has said that the Sofi stock is a sell right now, even at its lowest price point. Analysts are also generally in agreement about giving Sofi Technology stock an average price target of $23.88, which they think that the stock could reach in the beginning of 2023. However, they do have a low-end price target for the stock, which would imply around a 30% drop from the stock's current price, which is around $14 per share right now. However, with that being said, Sofi Technologies also has a great upside price target of $30 per share, and normally the stock price targets range anywhere between $18 all the way up to $30, like we said before. So let's see how much weight this $30 price target actually holds. Could Sofi actually hit $30 per share in 2022? Well, let's find out. Some analysts seem to think so. They think that Sofi could easily more than double this year, and I tend to agree with them. The caveat for this growth is that Sofi needs to continue to land and increase their memberships. For instance, Sofi almost doubled their amount of members year over year, specifically in the 3rd quarter, to around 2.9 million members. So if they can keep that member growth trajectory high, I see no problem with Sofi eventually attaining a $30 price target for 2022. With that being said, I also want to mention that Sofi is not a profitable company right now, but they do have plans to become profitable later in 2023, which is relatively soon, which is why I find this to be a fantastic company, because they have a clear trajectory toward their profitability, and we can see that 9 analysts who cover the stock also believe that the company will at least break even in 2023. Sofi's biggest catalyst, which I'm sure you're aware of, is their bank charter catalyst, and that catalyst is supposed to surface in 2022, which could also invigorate the stock price. By obtaining this national bank charter, Sofi will be able to grow their lending business, which is where Sofi actually obtains the majority of their revenues. So this is not only going to increase their price target and invigorate the stock price because it's going to excite investors, it's also really going to help their overall revenues, and it could even boost their trajectory of receiving and becoming profitable sooner than anticipated. It's currently estimated that the national bank charter will add around $299 million in EBITDA, which is adjusted earnings before interest, tax, depreciation, and amortization. That would imply around a 25% bump on top of their already estimated 78% bump in EBITDA for the year of 2022. This is why analysts are very excited for Sofi stock, and that's why some of them believe that it can reach $30 per share in the time span from now to the end of 2022. The revenue estimates are also supposed to increase throughout 2022, which means that this is a very healthy and growing business. However, some analysts have downgraded the stock very very slightly due to a revision in some of their revenue estimates because the student loan moratorium has now been extended again, and Sofi makes a lot of money from student loans. So with that student loan moratorium extended, this could cost Sofi around $40 million worth of revenue, and this analyst is well aware of that, which is why he cut his price target from $30 per share by $2 down to $28, but he still considers that Sofi Technologies is a high conviction stock to buy right now. This goes double if you are an aggressive investor, because these analysts and the author of this article think that investors that are going to invest into Sofi Technologies this year are going to more than make up their money throughout the next few years. Now that we've seen what analysts think of Sofi Technologies, what do they think about Palantir Technologies, ticker symbol PLTR? So Palantir currently trades for around $16.70. If you didn't know, Palantir Technologies is a big data and analytics company that creates operating systems for both the intelligence community as well as commercial enterprises. We can also see the various price predictions from many different institutions and analysts on the PLTR stock. For Deutsche Bank, they have a hold rating on the PLTR stock and a price target of $25 per share. On the other hand, Morgan Stanley increased their price target for Palantir Technologies from $22 to $24. We also see that the Royal Bank of Canada downgraded Palantir from $25 down to $19. We also see that Jefferies Financial Group on January 6th, which is very recent, ended up cutting their price target for the PLTR stock from $31 down to $24. However, they still maintain a buy rating. Credit Suisse Group, on the other hand, maintains a neutral rating for the stock and a price target of $25, while 4 research analysts have said that the stock is a sell right now, while 3 say it's a hold, and while another 4 say that it's a buy. The average price target also comes in around $22.67. We can also see what institutions have started to add Palantir to their portfolios and double down on this stock. For instance, in quarter 2, we saw Vanguard Group raising its position in Palantir. We also saw great institutions and investment institutions such as BlackRock. They also increased their position of Palantir in the 3rd quarter. From this list, we can also see Sumitomo Mitsui also has raised their Palantir position in the 3rd quarter, just like BlackRock did. Plus, we see Geode Capital Management also raising their Palantir exposure in the 3rd quarter. And we can't forget about State Street Corp, which also raised their Palantir exposure in the 2nd quarter. So these are very big name institutions that are doubling down or maintaining their Palantir shares, which should give investors somewhat of confidence about the future trajectory of this stock. Cathie Wood has also increased her position in Palantir by adding over 625,000 shares of Palantir to her ARK Innovation ETF, ticker symbol ARKK. If Palantir is such a good company and all these institutions are adding it, why is the stock price continuously falling? Well, this is mainly due to the Federal Reserve, because recently the Federal Reserve has come out with statements, and it's going to be a triple threat statement that's saying that they're going to not only raise interest rates, but they're also going to taper their asset purchases, which means that they're going to stop or at least pull back on their asset purchases, so it's not babying the economy anymore by buying junk bonds, and they're also going to reduce their balance sheet. The article says that tapering asset purchases will reduce liquidity in the market. That signals that the Fed may increase interest rates soon, and soon refers to March because that's when the Federal Reserve says they're thinking about increasing their interest rates. And when interest rates go up, the cost of borrowing also increases. Companies are therefore less incentivized to borrow money at higher rates, and this can decrease a company's growth. So if you're a growth company and you're not incentivized to borrow and grow your company, that means your company is going to grow slower. This is why technology, innovation, and growth stocks have all pulled back recently. Also, higher interest rates will also discount future cash flows at a higher rate, which will lower the present value of a company. We also see this from Palantir Technologies because Palantir currently has a fair value price of around $30, and that is calculated based upon their future free cash flows. And because those higher interest rates are going to impact these future free cash flows, that means the future fair value of Palantir is no longer $30, it's somewhat less now, so we definitely have to keep that in mind. But now I want to talk about what analysts are saying about NIO stock, and NIO is an electric vehicle manufacturer over in China. Recently, NIO shares have increased around 5%, and this is because of very good news from various analysts and because Wall Street is very bullish on NIO right now. NIO's average transaction price in December was about $69,700, and this also went hand in hand with their very strong delivery numbers for the most recent quarter, along with other electric vehicle makers, because again, China is the electric vehicle capital of the entire world. So if you're going to invest into an electric vehicle company, investing in a Chinese electric vehicle company is going to be pretty profitable for you. Wall Street has been taking note of a plethora of electric vehicle companies over in China, including NIO, which currently trades at $31. The low-end price target, according to analysts, is $20. The average price consensus is $58, and the high-end price target for 2023, the beginning of 2023, is $87 per share, and many analysts think that they can actually beat the majority of these price targets. We also see XPeng, ticker symbol XPEV, ticker name XPEV. It currently trades at $48. The low-end price target is $39. The average price consensus among analysts is $59, and the high-end price estimate is $92 per share. Analysts are also very bullish on Li Auto, ticker symbol LI. The current stock price is $31. The low-end analyst price target is $24. The average price consensus is $44, and the high-end price prediction is $65 per share. According to analyst Erica Chen, all of these companies have a clear outperform rating, and they're supposed to appreciate very well over the next few years. NIO specifically is positioned very well because they offer affordable luxury. Also, a Citibank analyst named Jeff Chung thinks that new energy vehicles such as electric vehicles are going to skyrocket over the next decade, and I completely agree with him. Just look at NIO's growth so far. NIO's sales has increased around 109% year over year from 2020 all the way to 2021, and we also see that the overall sales in China have increased at a rate of around 180% year over year, which is absolutely phenomenal. So this begs the question, should we invest more into NIO or should we invest more into Tesla when we specifically are referring to the Chinese market? Well, analysts tend to think that investing in NIO is actually a better buy right now due to how much the stock has pulled back. Because the main reason for this is that the TSLA stock price currently trades at $1,100, while the low-end price target and the average price consensus are substantially lower than their current price. So the TSLA stock could receive a drastic pullback soon. On the other hand, if we look at the high-end price target according to analysts, Tesla stock could continue to appreciate all the way up and past $1,480 per share. But currently, right now, analysts are saying that NIO is a better buy just for 2022. It does not mean that NIO is a better company than Tesla. It does not mean that Tesla is not going to surpass NIO in growth in another year. Analysts are just saying that NIO specifically has more upside than Tesla because A, they have a lower market cap, B, they have a home field advantage, C, they're offering cheap luxury to people, and they're expanding around the world, very similar to Tesla. So to me, it really doesn't matter which one of these companies does well because I own both of them. It just matters that the electric vehicle market is going to continue to appreciate, which I think it will. With that being said, remember to smash the like button right now, subscribe for more videos like this one, comment your thoughts down below about Tesla, NIO, XPeng, Palantir, and Sofi. And with that being said, I will see you in the next YT video.